Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, big ticket numbers being awaited. The likes of Reliance Industries, Infosys, and Axis Bank, all three reporting numbers. A big chunk of a Nifty weight will be reporting numbers today, and of course, a good day of trade coming in today. Yatin, ahead of that, third straight day of gains. We saw the Nifty, in fact, clearing that 23,300 mark on the upside. So we are well above the November lows. So we would. In fact, December lows, so to say, we will be heaving a sigh of relief for that matter. But broader market outperformance continues. The Nifty Smallcap index gained, somewhere around, almost 2% or so. NSE advanced decline ratio, firmly in favor of gainers, 3:1. That was the NSE advanced decline ratio. Good recovery on the Nifty Bank index as well. Axis Bank also, upbeat ahead of numbers, almost 1.5% kind of gains coming in there. If you look at the pockets that were doing well today, metals and PSU banks leading from the front, SBI also gaining once again on the Nifty. And if you look at some of the underperformers and laggards, you had IT ahead of Infosys numbers under pressure, Pharma FMCG, these were the laggards. But as we speak, Yatin, Axis Bank numbers have kind of come out.
Yeah.
Profit is at 6,300 crore rupees versus the CNBC TV18 poll of 6,284 or thereabouts. As and when the numbers come in, we will get you more on that. But if you look at some of the other numbers, in fact, other movers on the index, you have the likes of HDFC Life. Solid performance coming in, Yatin. Even stock price wise, we saw a very good up move coming in. Some of the other names that were among gainers was, of course, SBI Life, rub-off effect of HDFC Life. BEL was again gaining. Shriram Finance, Adani Ports, ONGC, SBI, these were the gainers. On the flip side, you had Trent once again back under selling pressure. Yesterday seemed to be like a one-day wonder. It had snapped out of an 8-day losing streak yesterday. But today as well, it is under pressure. Dr. Reddy's, HCL Tech, Tata Consumer, Wipro, Infosys, all of these were the laggards. But, look at the net NPA. It has kind of edged up on a quarter-on-quarter basis for Axis Bank, and the numbers are still trickling in. But Yatin, in the during the course of the day, we had a lot of result reactions as well, right? And also railway stocks were up on hopes that there will be higher outlay for the railway sector in the budget.
So, typically what happens is that before the budget, we have the whole host of defense stocks, railway stocks, PSU stocks make a move. In fact, today, if you look at the Nifty 500 gainers, we had stocks like Ircon, Jupiter Wagons, RVNL, Railtel, all of these stocks up anywhere between 10 to 16%. So a great day and a great show for railway stocks. Also, we had President Joe Biden, in his speech, he said that the Israel-Hamas ceasefire really opens and paves the way for the India economic, corridor between the Middle East and Europe. This is one of the most sought, for the trade which will benefit countries like India. So we have the Middle East corridor along with India and Europe clearly helping a big trade channel open. So this is one reason also why railway stocks were up. But what was not doing well in trade was Motilal Oswal Financial Services. That stock tanked nearly 8% in trade. Newgen Software, JBM Auto, Devyani, all of these stocks were down anywhere between 5 to 8%. If you look at stocks like BSE, that stock hit a fresh 52-week high. Biocon also hitting that fresh 52-week high. So these two stocks continue to remain in good momentum for the last couple of days.
All right, those were all the movers and shakers from the broader end of the markets. But just quickly take you through Infosys expectations before the numbers come out. They are expected to come out any moment. The key thing to watch out for will be any revision in guidance. Street is expecting an upward revision. Looking at the estimates, Nuvama sees FY25 guidance in the range of 4.25 to 4.75 in constant currency terms. Kotak Institutional, it sees the FY25 guidance at 4.5 to 4.75%. Currently, it stands at 3.75 to 4.5%. So basically, it is hovering in the range of 4 to 5%. 5% will be considered to be very good on the upper end. Aside of that, some factors that will impact, of course, seasonality, because furloughs will be higher, and absence of large deal ramp-ups may also weigh in on the third quarter. But crucial to watch out for will be the commentary, on the demand side, because so far the peers have given good commentary. although HCL Tech had disappointed on another front, but commentary wise, they have pointed out that there are green shoots in consumer discretionary demand, and the same thing will be expected from Infosys as well. In terms of revenue growth, rupee revenue is expected to grow 0.5% or thereabouts on a quarter-on-quarter basis. Dollar revenues are seen higher by 0.9%, almost 1% on a quarter-on-quarter basis. That's the CNBC TV18 poll. But the margin on the margin front, it is expected to come in around 21.2 to 21.3%. The guidance on margin front is expected to be maintained at 20 to 22%. Deal TCV seen in the range of $2.5 to $3 billion. Of course, absence of large deal ramp-ups will be there, but let's see whether or not they have won any smaller deals because demand is expected to be better than what it was last year. Aside of commentary on discretionary demand, some of the other factors that will be watched out for will be updates on attrition, as well as hiring plans. Of course, the company had deferred its annual wage hikes to fourth quarter, but they will be rolling out some salary hikes from February as well.
Correct.
So what kind of impact will that have on future margin trajectory or not? That's something that we'll be watching out from the commentary. So Infosys numbers awaited, Yatin. Let's see how things pan out.
Yeah, and since you're talking about results preview, Reliance Industries also will come out with the numbers. So if you look at Reliance Industries, this will be a quarter when you could see some turnaround on a sequential basis. In fact, if you look at the Reliance Q3 consolidated performance, the EBITDA is expected to increase by nearly 5%. The EBITDA margin also is seen higher by nearly 60 basis points, which will come in at 18.3% for the consolidated entity. But if you look at the factors, clearly the oil to chemical business, which is the O2C business EBITDA, is seen higher by nearly 10% on a sequential basis. Goldman Sachs expects the GRM also to improve by nearly 6% on a sequential basis to a level of $8.7 per barrel. And if you look at Jio's ARPUs, they are expected to be around 205 rupees versus 195 last quarter. So, we could see Jio improve, O2C business improve, and obviously there was a festive season impact which will help the retail business also do better in terms of performance, wherein the overall growth is seen at close to 10%. If you look at Goldman Sachs on the Reliance preview, they believe that Reliance Q3 core EBITDA will grow 5%. And if you look at Morgan Stanley, they are expecting a 18% growth in telecom EBITDA and 6% EBITDA jump would be seen for the retail business. Overall, it should be a healthy number, sequential improvement, and obviously the value unlocking, which is a probable IPO of Jio or the retail business, is something that we'll be watching out for.
That's true, Yatin. And if you go by all the brokerage notes that have been coming out, they have been pointing out that the stock has underperformed, but it looks like it is a good entry point, and they see upside of somewhere around 30 to 35% on the stock. Of course, we'll be watching out for the numbers that will come out later in the evening. But one strong performance was from L&T Tech, and the stock was clearly reacting to it. At one point in time, it was up 10%, but cooled off slightly from the day's high, but nevertheless clocked in good set of a good rally in today's session. In fact, the strong performance was seen both on the revenue and margin front. Deal wins wise, it achieved its highest ever deal TCV in Q3 with 8 large deals. One $50 million deal, two $35 million deal, two $25 million deals, and three $10 million deals. So yes, record deal wins for L&T Tech. Expects the deal momentum to continue in 2025 as well. Organic growth guidance was at 8% vis-a-vis 8 to 10% that the street was expecting, but Kotak estimate was even lesser than 8%, so 7 to 8%. So that way, organic growth guidance wise also it is fairly okay. It has a lower exposure to the automotive segment that has been softer. So its exposure to the automotive segment is at 33% of revenue versus the peers. Peers like Tata Elxsi for that matter have a 50% exposure, and KPIT comments of course 100% exposure. So that way it is much better placed because automotive segment has been witnessing pressure. So there also the company is pretty well supported. Aside of that, brokerages have, but in fact let's talk about the management commentary as well. Fairly upbeat. They've said that the demand environment is much better versus last year. They are comfortable, on all the three segments that they operate in, and they are hopeful that all of the three segments will grow both in the fourth quarter as well as FY26 as well. And they have maintained their medium-term aspiration of $2 billion revenue and 17 to 18% margins. Brokerages are fairly positive on the stock. Nomura is neutral. Target price is at 4,900. they've said that they've taken note of the strong performance of the deal wins being strong, and they also believe that the EBIT margin is going to improve gradually over FY26 to FY27, which is why perhaps they have a neutral rating, but they believe that the valuations are looking attractive. HSBC has a buy call, target price is 6,000 rupees, and they also believe that relative valuations are looking fairly reasonable. Motilal Oswal, however, is a little cautious. They have reiterated buy though and revised their target price at 5,500. Kotak has a sell rating, but they have raised their target price from 4,450 to 4,750. MK meanwhile has upgraded the stock to add while retaining its target price of 5,150. So good going for L&T Tech, and the fact that it has a lower exposure to the automotive segment, which has been witnessing pressure, looks like it's well poised, and deal wins wise it has done fairly well.
Correct. LTTS, when I spoke to the management, one of their acquisitions also expected to well integrate in the next 12 months. Probably, the next few quarters will be days of consolidation, but suppose that the management does expect good project wins, as well as generative AI is one segment in which they will be putting a big focus on. But moving on from LTTS, to stocks like HDFC Life, which were clear movers in trade. Obviously, the key point for HDFC Life, despite a mediocre quarter, was that the sequential margin improvement was higher than expected. Most importantly, the management also shelled out the strategy to improve the overall margins as well as the distribution channel. In fact, the focus on new customer acquisition and distribution channels is something that the management clearly spoke about. Obviously, IRDAI as a regulator, there have been reports that they want insurance companies to depend less on the banking channel, especially the parentage, in this case HDFC Bank. So something like a LIC, wherein we could see some better employment opportunities, better network when it comes to the channel partners. Also, HSBC has a buy call on the stock with a target of 750, and they say that the incremental change on low margin linked products would slow down moving forward, and we could see some further improvement in overall margins. In fact, they have also said that the bottom line overall should do well with the margin improvement in sight. So this is one stock which has clearly been an underperformer since the listing. We haven't seen much of a firework in the stock, but probably with the management shelling out details about how sales mix will improve, how distribution channel will improve, has kept investors happy, and the reason why the stock was up nearly 10% intraday.
Yes, Yatin, the stock has been stuck in a downtrend, so it would be a sigh of relief to see the stock gaining, and that too by 10% today. But of course, on that note, I think we've come to the end of the show, but just very quickly I want to take you through the Axis Bank numbers, just a glance. Profit is largely in line with estimates. NII was expected to grow 10%, but has grown somewhere around 8.5% or thereabouts. So it's below estimates. On the asset quality front, it has worsened slightly. Both GNPAs and net NPAs are slightly above if you compare it to last quarter. So yes, detailed analysis may be later, but we are all awaiting Infosys and RIL numbers later in the evening. For Infosys, don't forget to tune in around 4:15 or 4:20. We'll get you an analysis on the numbers with a battery of guests. But for now, it's a goodbye. Thanks a lot for watching.